This is Joe Rabil with Rabil Stock Research. So I've been providing stock research and consulting to institutional investors for about 35 years. And in the last few years, I started working with financial advisors and individual investors as well. Now, what I want to do today is explain how we can use ADX and MACD together to give us a better idea of how to distinguish between stocks that are buyable. We want to look for pullbacks. All right, if we've got a strong powerful trend, or a trend in place, we typically are looking for a pullback entry. I want to show how we can use MACD and ADX together to kind of help us distinguish between ones we want to buy weakness and ones we want to avoid on weakness. All right, then what I'm going to do is I want to cover a lot of different things today. We're going to look at the indices. We're going to go through I'm going to look at the 10-year rates, and then we'll look at a couple sectors as well. Then I'm going to go through the individual symbol requests that came through this week. All right, let's go ahead and get going. All right, so I'm going to start out with JP Morgan. I'm going to do two different bank stocks, and I'm only looking at two time frames. I've got a monthly chart on the left and a weekly chart on the right. Now, what I want to do is explain how if we've got a stock that's moving up, all right, we want to look for pullbacks in that trend as a potential entry point. All right, but sometimes the pullbacks are buyable and sometimes they are not buyable. And I think we can use the MACD and the ADX in both the monthly and the weekly to really help us zero in on the ones that we want to be focusing in on versus the ones we really want to be avoiding and potentially even considering being a seller on a rally. So let me just go through this. So look at JP Morgan, this 18-month line, this magenta colored line I'm outlining here. This line I think tells us a lot. If we're in an uptrend above this line, then we want to go and measure the strength using the MACD and the ADX. And if you notice what's happened with JP Morgan on this time frame, it's been strong and holding above the 18-month, but look at how the MACD has been confirming the whole way, hitting new highs, holding above its signal line, taking out the prior peak. And then look at the ADX line. Now, ADX is comprised of three different lines here. The green line represents the strength of the buyers. The red line represents the strength of the sellers. This is called, green is called plus DI. You can see measured over here, and the red is minus DI. Now, the difference between those two is going to be the blue line, which is the ADX line, which is what most people say they're looking for. ADX will determine how strong a trend is. I use this 25 line to help determine just how strong the trend is. We need if a stock is moving up, on a specific time frame, we want to see if the blue line and the ADX line is actually crossing above 25 as we move up. If it is, then we know that we have a pretty strong trend and we can consider buying it on a pullback. Now, I prefer in most cases to keep an eye out and see if the MACD is also holding the signal line through a pullback as well. You can see that happened here, and that was kind of the start of this move after the 18-month had turned around. Now, if you notice also what's taking place on the weekly chart, we had really strong momentum here, and it really pretty much confirmed all the way through, because every single peak, every time we made a new high in price, back here and back here, the ADX line made it above the 25 level. See this 25 level? We keep making this blue line keeps crossing above. Notice also that when we had this really harsh decline, that the ADX stayed low. That's based on the selling strength. So that, to me, that's a very good sign. I'd also say that on the decline here, the MACD held above the zero line. Even though we had a really harsh decline in price, it went from 280 down to almost 200. MACD held above zero, and I think that's also a good sign of strength. So we have MACD and ADX on this time frame telling us we have a strong trend condition in place, and then we can also evaluate the strength of the decline using the ADX on the lower time frame to make sure that the selling hasn't taken over and that we should be a lot more concerned about the decline that's taking place instead of being looking to be a little bit more aggressive. So we'd actually be looking in this situation, we'd actually be looking for entries on this stock. Now, it happened very quickly. You had a king-queen reversal here, like a bull 180, where you had a big red bar followed by a big green bar. And that slapping those two together, you basically have a big tail reversal over the course of 2 weeks. But it would have been a very aggressive entry, but it basically told you, and you had been anticipating based on what we're seeing, pull back to the 18-month and strength here without a lot of strength in the sellers. Now let's just compare this to something like Truist Financial. So look at the move to the upside. Now look, if you're not looking at charts, you have a stock that's gone from about 25 to almost 50. It's almost doubled. If you don't look at a chart, you're thinking, well, this stock's actually done pretty well. It's doubled in price. But you can, if you look at a chart, you can also see there's a lot of overhead resistance. But notice the difference in the ADX. While the ADX on JP Morgan had been making strong new highs based on the buying strength, and MACD was climbing and climbing and climbing, this MACD just made it barely back to the zero line, right? And we didn't get the ADX to actually move. Even though the price almost doubled, we didn't get the ADX to cross above 25. All right. Now, if we go and look at the weekly chart, through all of these peaks, all the way through here, ADX never really got through. It did at the beginning, but then it lost strength and it never really got through the 25 line after that. But then notice on the sell side, you see the strength in the sellers. You see the crack of the zero line with MACD. Both of these are telling us that we've got a problem here. So it's like almost the opposite of what's taking place in JP Morgan. In JP Morgan, we're looking to buy a pullback because of the strength that's taking place and the lack of strength in the selling. And on this one, we're actually now maybe looking to be a seller on a rally after the strength that showed up in the selling because there was no strength on the upside. And no strength on the upside in either time frame. So we use the ADX to kind of determine on the last leg. We look at each last leg and determine how strong the move is. And then we can look at the MACD to really help with the timing, especially around the zero line. So if we use these two things together, I think it can be easy. You can easily distinguish between which stocks you want to be focused on a pullback and which ones you don't, especially ones that are in the same group. Or in the same sector, and you want to really zero in on the ones that have the best chance of getting a strong rally or a big turn and start of a new uptrend. All right, hopefully this helps. Let's go ahead and move on. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own research before making any decisions. So I wanted to spend a few minutes just showing how on ACP, this market summary page, is something that can be very useful. I'm going to go through the different markets just using this and clicking on things. So the way I like to set this up is I'm not a visual guy, so I know there are ways to set it up where you have all this information and it's just all a bunch of numbers. But what I like to do is link these charts here. So I've got my monthly, weekly, daily, and then another weekly over here with relative strength with RSI, and I've got my zigzag. And so it's just nice to see everything on one screen. And then I can go and click on the different different markets and see what I'm looking at. So I'll show you how as we go along here. Let's just start with the S&P. I find it interesting. What's taking place is, see, if you look in 2023, do you see how where the 18-month turned up, we came back and tested that line. We respected that line. We respected it. And that was the start of a big move, all right? Now, after this big move, we didn't respect the 18-month. We actually broke through it, and then we broke through it again. You see how there's disrespect for this line? It's not like, see how we were failing at the line here? So that green line, you see how we're failing at it, and then we found support at it, right? Those are times where the 18-month is actually valuable, is telling us something that we have a trend in place to the downside and then a trend in place to the upside. Now we're in another period where there's disrespect, and we should be kind of until we can respect the line, meaning if we can pull back and hold the line and test it and turn up, that would be very bullish. If we come back below and the line starts to roll and we rally up and fail, then that would be very bearish. So we're kind of waiting for a little bit more of a confirming signal. I think we're going to need to either pause or pull back to really set that up. And we want to watch the momentum conditions as that plays out. But the reason why I'm focused on price actions, the price action, is because the volatility of the market is probably going to make these indicators lag, especially the ADX is going to lag a little bit. So we're getting this really negative signal in ADX on the weekly chart, but we have this massive V bottom that has erased almost the entire decline. All right. Now, this just can't catch up that quick. It has a look back period. It's looking at, when there's volatility, there's always going to be lag to this indicator. So what we can do is we can look at the next time frame up. We can look at the daily chart. So this rally, we want to measure the strength of this rally using the daily chart. And we've moved up, and green DI has made a little bit of a move, but notice how the blue line, the ADX line, hasn't even been able to get above 25. Now on the way down, we had a lot of strength in the sellers. But on the way back up, we don't have confirmation that we have confirmation that the buyers are in command, but we don't have confirmation that the buyers are that strong. So I'm still inclined, based on what I'm seeing here and what I'm seeing here, that we should get some kind of a pullback or retracement. Now, as a side note, we did see a pretty big increase in the number of bulls this week. I use the Investors Intelligence numbers. I've been using them for like over 30 years now. And they had a pretty big jump in the number of bullish advisors. So when I see that, I kind of feel like, there's a pretty good chance maybe we pause, pull back, work off some of this overbought condition that we've created. And what we have to determine is how strong of a pullback we get. If we get an orderly pullback that's not that bad, and we actually even hold the 18-week potentially, then I think that would be a very bullish sign, especially if we can form some kind of a higher low and turn back up. So that's kind of what I'm watching. I think this 18-month is pretty critical. That's around 55.50. I think if we hold that on any kind of a pullback, that would be a good sign. So we could re-break the 18-week, but then hold the 18-month and turn back up. And then coming back up through the 6,000 mark would be very bullish. All right, let's look at something like the Nasdaq. Very similar pattern. Normally, I talk about the QQQ on this weekly show because the reality is right now they're very, very similar. MACD is overrunning to the upside. This is the same thing that's happening in the S&P. So we get this move like this, even though there's not a lot of strength here. What this is telling me is that the odds of a big drop fast are probably small. We need a little bit more of a complex top where we break the trend line and then make a lower high and then reverse. I don't think it's going to happen all at once just because we have support from the zero line on the daily chart. All right. The one that's bothering me the most is it's almost like what we were just talking about. This chart looks like the TFC, the truest chart. You see how we broke it and we have strong momentum to the downside and we're below resistance from the 18-month. We're rallying back into that resistance, negative momentum condition, negative relative strength. These are all the conditions I would say are a big negative. Now, the positive that I see here is that there's a lot of support underneath. So I'm not necessarily looking for a nasty new low, but what this tells me and this relative strength underperformance tells me is that we're probably not going to see a big rotation right now because this is not rotating to the upside. We're probably going to see the same kind of leaders reemerge back up. If we're going to continue to the upside, the stocks that are kind of continuation signals are ones we're going to watch, or ones that are breaking out of new bases with good relative strength. Relative strength is very important right now. All right, let's look at a couple other things. Let's look at the bonds. I want to look at the 10-year because I want to point something out, and I keep mentioning this to my subscribers. If we look back, and in fact, I'm going to show this on a quarterly chart because I want you to see what's really going on. Do you see the shift? This is a long-term, goes back to 1980. You see the shift that's taking place, but more important to me, look at the momentum condition of the shift. If it were just moving up and there was no momentum associated with it, then I'd say, well, this could just fall right back down. But the momentum is telling us, yeah, we can pull back or pause here, but there's probably substantial support underneath, and the odds of a breakout above 5 sometime coming. It might not be this year. This is a quarterly chart. It might take a couple more quarters of pause. It could be into next year, but I think the odds of a move to the upside in these we're at risk for that. All right, so you want to be aware of that. I think we're in a situation where I think we got to be have an understanding that that I know a lot of the talk is that rates are going to drop and all that, but I don't see that happening based on the chart pattern anyway. Just to look at a couple, I want to look at copper real quick. You see the volatility move this had, big volatility both ways, and now it's starting to quiet down. You see how it's quieting down? So we're probably prepping for a new move now that we've worked off this volatility and quieted down. I'd like to see the market do that too, because if we get a quiet period after a lot of volatility, that's usually the precursor to the next up move. The other thing I want to mention is actually I want to look at natural gas. Natural gas has had a pretty strong pullback, but the stocks are showing a lot of strength. The gas stocks are showing a lot of strength, a lot of them even breaking out or very close to breaking out. I think that's a good sign for natural gas itself. I think the futures is actually going to follow the stocks based on the way I'm looking at this. I think there's a lot of support, so I just thought I'd mention that. The other thing I'd mention, and this is where I saw these country funds, just notice, so we've got all this volatility in our markets and everything. Let's just look at a few of these funds. Look at the Chile fund. Look at this massive base breakout. Low ADX, strong ADX, right? We've got this 2 time frame kind of breakout pattern, and it's really having nice follow through. Let's look at a couple others. I mean, I could look at UAE. Look at the monster move this is making. Look at all the volume here. And then we had low ADX here and we had low ADX here. And now we have strong ADX on this time frame. I mean, yeah, I don't know how long these are going to go on, but the base of these are pretty substantial. You can look at something like South Africa breaking out of a big cup and handle pattern. Again, we have low ADX here and low ADX here. It hasn't quite kicked in on the daily chart either, but just look at what's going on a relative basis. Momentum signs are starting to improve, especially when you look at MACD. So I think we got to respect what's taking place in these and, maybe watch for a pullback in some of these as a potential buy signals. All right, let's look at a few other names. I wanted to look at a few stock requests that came through. So this is one where, yeah, I see what's going on here. We're showing signs of, minor improvement where we're getting this higher low forming, but we don't have any sign of momentum improvement, right? And it looks almost like an ABC rally. Now, I don't think that's actually what's going on. I do think we could potentially break out above the 18-week. But we're probably going to have pretty big problems when we look at the higher time frame. We're around 51, 52, right where this resistance comes in from the 18 months. So I recognize the potential for a short-term rally, but I would treat it as such, a shorter-term play, not anything crazy or anything like that. All right, let's look at VG. So this was another request. There's not a lot of history here. We have had 4 months to the downside, and now we're showing green for the first time. We are showing also this is starting to pause. We don't even have enough history to show weekly MACD or ADX yet, but it does look like it had maybe a failed new low and starting to cup around. We're starting to show signs of maybe buyers stepping in on the daily chart. So short-term signs of improvement, but I think, we probably would need to do this off of an hourly chart. Let me actually look at the hourly and see what this looks like. So on a short-term basis, this actually has a pretty good look to it, but I would treat it as a trade because we don't have a whole lot of history. Use it for a trading move into the next resistance, which is probably around 14, something like that. Last one, let's look at this CoreWeave. This is a stock that had just came out, and look at the strength in this. I think this is a pretty good sign where we're seeing this type of follow through, especially in the environment we're in. It's something to definitely be on the lookout for. This is a widely followed big tech name. A lot of institutions watching this. I think you'd want to watch this for a pullback. Thanks for joining me today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week. We'll see you next time.